Notably, consumption is clearly on the rise, driving demand-led growth. A survey estimated that at 2005, there were over 320,000 US dollar millionaires in the mainland of China, and the number is only expected to increase. Well, Secretary Paulson just mentioned about the fact that China's growth and integration into the world economy benefits the Chinese people and the people of the world. I cannot agree with him more, particularly in the case of Hong Kong, because since the opening up of Chinese mainland economy, Hong Kong has served as a platform for capital raising and contribute to the growth and development of mainland's banking and financial system. Our position as China's international financial center is unique and irreplaceable. As China's economy continues to grow, the scale and scope of her international financial activities will rapidly increase. Hong Kong's role in serving as the mainland's channel for financial intermediation with international fundraisers and investors is also becoming more significant. Hong Kong stands out as the preferred platform for the listing of Chinese mainland enterprises outside the mainland. Since 1993, the year of our first H-share listing, Hong Kong has raised over US $190 billion of capital for a wide range of Chinese mainland enterprises. Some of the names are familiar to all of you: China Mobile, China Life Insurance, PetroChina, China Construction Bank, to name a few. Actually, today we have about 370 such companies out of about 1,000 companies listed on our stock exchange. Last year, in particular, we had some mega deals. As you know, the Industrial and Commercial Bank of China, ICBC, launched the world's largest IPO when it was simultaneously listed in Hong Kong and Shanghai last October, raising some US $16 billion. While we are undoubtedly happy about all this, we are also mindful of suggestions in some quarters that Hong Kong has a lax regulatory regime which enables some Chinese mainland enterprises to list. This is absolutely not true. We have not lowered the bar, and we will not lower the bar. Any international investment banker, lawyer, or accountant who has practiced in Hong Kong will tell you that our regulatory regime is fully in line with international standards, and that our regulators are just as tough as their counterparts in other mature markets. We will not compromise quality for quantity. We maintain a level playing field for all issuers and protect investor interests. What we offer to Chinese mainland enterprises is not just a channel for raising capital. By meeting our initial listing requirements and post-listing obligations, these companies enhance their corporate governance and bolster their standing in the international market. Chinese mainland enterprises have many reasons for choosing Hong Kong as their international listing platform. I want to name a few factors. Firstly, we have a very large, deep stock market, attracting funds from all over the world. We can provide the necessary liquidity to support very big listing. Secondly, we have a comprehensive understanding of the mainland market and share the same language and culture. Thirdly, we have an excellent geographical location and are the main international gateway to China, as well as in the same time zone. Fourthly, we have a deep, broad pool of international professionals with extensive experience in dealing with Chinese mainland companies and international investors. And finally, we adopt international defined market rules, regulations, and accounting standards. Our regulatory regime maximizes market development while also safeguarding investors' interests. We are always mindful not to allow the pendulum to swing too far in any one direction. Let me talk about Hong Kong as a bridge to opportunities. Hong Kong is not only attractive to Chinese mainland enterprises, we also have much to offer to international investors and enterprises in their quest for investment and business opportunities. We can act as a platform for accessing opportunities in Asia, in particular China, in a number of ways. First, for investors who are interested in capitalizing on the growth of the Chinese mainland economy, the most effective route, in my view, is through buying Chinese enterprises shares listed on the Hong Kong Stock Exchange. Our free and open market is supported by world-class financial infrastructure with complementary policy and legislative initiatives, such as the enactment of legislative amendment last year to exempt offshore funds from profits tax. Second, fund managers can leverage on Hong Kong's unique strength to tap into the huge savings of China, which is estimated to be about $2 trillion. Hong Kong is already Asia's leading wealth management center, with over 80 fund management companies currently operating in Hong Kong, including firms from the US, UK, Switzerland, and others. China's Central Authority recently announced measures to allow investments in overseas financial market through QDII, or Qualified Domestic Institutional Investors. Fund management houses, including private equity as well as private banks, should make use of this opportunity and further expand your operations in Hong Kong. If you are not already in Hong Kong, you should. Third, I know that many investors are very bullish on the future of renminbi. For you, I bring good news. Before long, Hong Kong will be the only place outside the mainland of China where renminbi-denominated financial bonds can be issued by Chinese mainland financial institutions. So you'll be able to have exposure to renminbi through this channel. Fourth, due to our infrastructure and strength mentioned earlier, Hong Kong is the ideal launch pad for foreign enterprises to set up offices for doing business in the mainland of China. In 2006, over 6,350 overseas companies had regional headquarters, regional offices, or local offices in Hong Kong.